This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech players in the world today. Okay, let's roll. Welcome to a combined Breaking Banks and Breaking Banks Europe edition. This week we're going to be talking about crypto and central bank digital currencies. A lot of talk about this. It was covered off at the World Economic Forum recently. We see various central banks around the world playing with the formats on this. And clearly, it's something that requires some consideration. China is likely to launch their centralized digital currency. For many crypto purists, of course, centralization is part of the issue of fiat currency. So carrying that over to the digital world is in itself a potential question mark. And then we see Libra coming back, but maybe underwritten by fiat currencies. So the whole potential of that disruption there as a decentralized effort seems to have cooled. So we've compiled a group of experts to discuss this subject today, where we're likely to go with the central bank's efforts in this respect. And joining me from the Breaking Banks EU team is Ajit Tripathi. Ajit, welcome.
Thank you, Brett.
Do you want to introduce our panelists for today?
Absolutely. Today we have an illustrious cast of attendees and panelists from around the world. We have Todd McDonald, who is a co-founder of R3, who are very well known for their work in DLT and central bank digital currencies. We have Makoto Takemiya, who is the founder of Bakong and Soramitsu. They have done some incredible work with the Cambodian Central Bank on a national retail digital currency. We have Alexei Grimm, who is the head of digitalization for the Central Bank of Finland. And we have Lynn McConnell, who is an ex-regulator with the FCA and a founder of a fintech startup doing custody in London. Welcome, panelists. How are you doing today?
Fine, thanks.
Doing great.
Good. So let me get started with the questions. We have a lot to cover. This is an exciting topic with a lot of different dimensions. So let me start with our central banker panelist, Alexei. You recently wrote a really well thought out article, and in that article, I think one of the things you said is that central bank digital currencies do not require a blockchain. I know this isn't a blockchain discussion, but could you tell us more about your thoughts and why you came up with that conclusion?
Sure. Yeah. So, thanks for having me on this program. I mean, as you mentioned, I think they're just simply unrelated issues. So when we talk about central bank digital currency, we're talking about the central bank doing what it's already been doing and providing a payment system based on the currency that it's already issuing. And it's already doing that to banks, and it's been developing different kinds of ledger systems and payment systems for decades, if not centuries, and there's really no reason to do it in a distributed way, or like I really don't see the two issues connected in any way. So I mean, you can do in terms of software architecture, you can do it in many different ways, but I don't see any sort of particular reason to do it one way rather than another way.
So let me ask you a more fundamental question then. What is central bank digital currency, right? I mean, money is already digital. I can make payments with Venmo, Revolut, you name it, TransferWise. So what's the big idea? How is a central bank digital currency different from what we do today in terms of electronic payments?
So I think from a user's perspective, it's really not very different. So I think the key difference is that if you use Venmo or PayPal or Revolut or any of these electronic money type of solutions, as a customer of that service provider, you have a claim on that company. So you have put money on that service or on that account, and then you can use that to make payments. So in the end, it's that service provider who owes you the money or owes you the services that it's promising that you can use. In CBDC, the service is very similar, but the difference is the claim is on the central bank. So the central bank promises to take your money and keep it safe and then provide those payment services. And as of now, central banks don't do that. So they've left that to the private sector. And CBDC would be basically doing the same thing, but with a sort of central bank as the service provider.
So let's go to Makoto-san then. Makoto-san, so why did the Central Bank of Cambodia build its own central bank digital currency? I mean, who is using it? What is it for? What problem does it solve?
So the Central Bank of Cambodia, as you may know, launched their Bakong system as a pilot last July with real users and real money. And the main, I think, motivation for this was to increase financial inclusion because, as you may know, Cambodia is a country that doesn't have a very high banked population. According to the World Bank, only 22% of people over 15 have full access to banking services. So this is something that can be increased because everyone has mobile phones. Cambodia actually has, I think, 130% mobile phone penetration, and a large percentage of that is, I think it's estimated 70 or 80% are smartphones. And so if you put the two together, you have unbanked people on one side, but these people all have, phones that you can connect to. And so it makes sense that if you want to provide more financial services, you can create a digital infrastructure. Now, this doesn't have to be the central bank that does this. As you just mentioned, in the US, for instance, there's, services like Venmo and PayPal. However, if many different payments companies come in and build an ad hoc system, it's harder to provide the regulation that's needed. And so their idea was to create a backbone system that then all these different payment companies can build on top of, and banks as well. So they're it's a two-tier system where all the users are intermediated by some other entity that provides the the direct user relationship. But the actual processing of the payment is done on the central bank's ledger. So I think that's the main innovation. And currently there's, I don't know the exact number of users. There are thousands of users registered on the system and transacting monthly. And it's a few $1 million that have been charged up. But it's still, a small start, and we're hoping to do a soft launch of, which is really the next stage in the launch within the next coming weeks. Hopefully this virus is not going to delay that at all, but you never know. But it is,
it is going to affect quite a bit around this. But, interestingly, it could push digital forward because, the whole no contact type stuff might lead to more creative digital approaches.
People are afraid of touching cash. I think.
Cash is. Absolutely. So that brings us to a slightly different angle on this, right? So when I hear from the experts, they talk about retail central bank digital currency and wholesale central bank digital currency. So Todd, this is a question for you. What's the difference?
Yeah, thanks very much for having me on. So that is a really important consideration. I think we asked the right questions before is what's the benefit for the users here, both from these central banks looking to issue this, but also from the end users. And if you look at the difference between wholesale and retail, there's maybe there are four constituencies here that need to get their some benefit met. Obviously, there's the central bank that's looking to potentially issue digital currency, whether it's wholesale or retail, and they have, broadly speaking, similar mandates globally, but each sort of currency zone or country would be unique. And then the other three would be on the wholesale side. Really, that user group would be those commercial banks that already have access to central bank money, or potentially that next layer of service providers, maybe they're large fintechs and technology companies that potentially might be getting access to it. But that really is around high value payments that need to get settled back into central bank money. Where you look at retail or potentially general purpose digital currency, it's quite a different proposition. And I think when we talk about retail CBDC, potentially spurred by our friends at Libra, we do think of, I guess, the man or woman on the street, think about things like Venmo, but a lot of the retail central bank digital currency area is not just for individuals, but they would be for small to medium-sized enterprises and smaller companies that rely on things like faster payment networks or are looking for better ways to, to really optimize things like working capital. Mm-hmm. So if you're thinking about benefit here, because it really have to start with benefit, and then we can talk about implementation, because of course I'll be talking my own book on the blockchain side, but there's different ways to implement this. I think it's really important when we talk about retail, it's not just for high street banking aspects, and it's really important to think about. It's a little bit odd to think about in this backdrop, but if you go back to small businesses and those trying to conduct things like trade finance or be able to have an invoice versus a payment, that's where a tokenized format of central bank money can be quite interesting and compelling and offer a direct value prop to those people within these different economies. But it does go back to, number one, what problem are you trying to solve, and number two, how are you going to implement it? And there's a lot of different ways you can do that. The good news is that since we started working in this back in, I guess, 2015, 16, initially with Bank of Canada, I think there's been a ton of interest in this space. Some of it because people are working on hard problems that they want to solve, like we'll talk about Sweden a little bit later. Some of it by a bit of FOMO potentially around our friends at Libra. But it really has advanced the common mental models around these public-private partnerships and different implementation models. And you're starting to see really, really interesting things happen in Cambodia and Sweden and elsewhere.
Right. So I think what I'm hearing is that there isn't a one-size-fits-all central bank digital currency. In Cambodia, where the banking system isn't that robust, it makes sense to offer direct access to central bank money to retail customers. Whereas in England, Finland, or let's say Sweden, and we're going to talk about Sweden shortly, a slightly different design might be in order, right? So now what's interesting about this start is that, we heard from our colleagues in Finland, Alexei, that these are orthogonal problems and you don't necessarily need a DLT architecture, whereas the central bank in Sweden have chosen to experiment at least with the DLT based architecture, right? What's the thought process behind using this decentralized architecture?
Yeah, so working with Riksbank and Accenture that are building a pilot on Corda, which is our enterprise blockchain platform. It does go back to how you architect this, and there are trade-offs for everything. But I think if you think about what a lot of financial markets are, a lot of this does go back to a public-private partnership or maybe even a federated model. And I think it's important, maybe we'll talk about a little bit later, as the thinking and the research has evolved on this topic. One of the implementations that folks are looking at is a bit of a hybrid model where you can include a central bank, the existing financial infrastructure, as well as the end user, depending on whether that's other banks or,
right.
or consumers.
That's similar to what the Bank of England said in their paper, right?
Very similar. This hybrid or synthetic central bank digital currency is something that the IMF has written about. There's lots of other papers around this, and you're starting to see it be referenced in other papers. And I think, by the way, the Bank of England paper was fantastic.
Yeah, I agree. So how does this work? So what's the role of the private sector? Who are the different participants? What will the central bank do in a scenario like that? And what will, let's say, and I open this to the floor, the payment systems providers would do?
The issue of consensus is really important here because, if you want to get adoption at sort of scale, you have that network effect. You've got to have something that enterprise is willing to use, stuff like that. That's part of the problem with sort of a central bank driven strategy that isn't based on a really strong consensus. The UK regulator has a pretty good relationship with the market, but I'm not sure that regulators like the US regulator or even the Chinese regulator have that same relationship where they could make this happen.
Yeah, that's an interesting question.
As you said, Ajit, let's open it to the floor.
Yeah, so let's ask our regulator on the group. So Lynn, what are your thoughts? I mean, you've been a UK regulator for a while, and now a fintech startup CFO.
Well, when you look at the the fact that you already have payment providers admitted into the traditional banking systems, the Bank of England already has relationships with the large banks and also their other providers as well. When the Libra paper came out, they decided they would even discuss the possibility of admitting Facebook into the payments system, which is a very traditional and old line group. So that was, I think, quite innovative for them to even consider that possibility. So they're recognizing that the landscape is going to change. And so I think the central banks now are all going to have to consider a mixed group of players and audiences. But I think they will still continue to focus on authorization and the risk management frameworks of the payment providers that are admitted. So I think that's very important. Also, when you look at the anti-money laundering requirements, which we may talk about in a minute.
Yeah, so let me just try and understand this as a layperson, right? So you have the central bank, which essentially builds the infrastructure, the core ledger, some of the core components of a central bank digital currency infrastructure. Then what do other participants do? What's the role of banks in this scenario? I mean, will central banks open access to the central bank payments and clearing systems to a wider group of participants? I mean, will I end up having an account with the central bank? How does this work? I mean, Alexei, Todd?
Yeah, I mean, you approached it from, starting from the central bank and then going to the market participants. But I think it might be actually easier to understand it if you go the other way around. So the end users have money, they get their salaries on their bank accounts, they have existing savings and so on. So they can allocate that to different kinds of payment accounts. And what happens to that money once it gets onto a payment account? So let's say I move money onto my Revolut account, for example, or TransferWise or something. Where is that money? Where does that money go? Currently, it's being safeguarded in a commercial bank. And that commercial bank, in turn, has reserves in the central bank. So it kind of goes from end user to commercial bank, or end user to e-money institution to commercial bank to central bank. So I think it's maybe easier to look at the flow of the deposit or the flow of the money from the end user to the central bank. And what's currently missing is that e-money institutions and payment institutions, so some of these fintech companies are not able to safeguard the money in the central bank directly. So they don't have direct access to the central bank. And that's, I think, the missing piece at the moment that CBDC might be able to address.
And I think if you look at the Sweden example, and I'll mix metaphors a little bit here, but if you look at Sweden very specifically, Riksbank has been focused on and researching the potential challenge of the decline of cash and cash usage. And I guess ask the question why. It's really is where there is a worry that the consumer will be separated from, in effect, as Alexei said, the backing of central bank money. So that will be, and that void is being filled by the private sector, which on the whole isn't a terrible thing. But we do have, there is some risk there of, in effect, the central bank losing touch with that consumer. And if you flip it around from the consumer standpoint, one of the things that I hadn't realized until I kind of studied the space a little more, if you think of like an example like Venmo or the potential Venmoization of consumer payments, the money I have sitting in my Venmo account is not backed by FDIC insurance here in the US. I guess it's backed by the full faith and credit of Venmo as a company. But
which in this environment must be very comforting.
But PayPal's the same. PayPal isn't a deposit guaranteed, value store, and yet people use it every day. So there is a certain element where you can get these with enough utility. the trust is such that I'm not sure the central bank sort of deposit guarantee becomes critical.
But there is a bit of a detachment there where, going back again, the transmission mechanism starts to become decoupled as well for central banks, and I think it's maybe unfortunately fairly relevant now, or if you think of what's happening from a monetary stimulus perspective, not having potentially that big of an impact on the backdrop of the coronavirus as well. That's another it's another angle on all this.
Yeah.
Yeah.
I think one of the things I saw in the Bank of England's discussion paper is that while retail deposits, so for example, if I deposit money with a bank, then it's protected by insurance up to £85,000. But if small and medium businesses, for example, are holding a lot of money with banks, then it's not all insured. So I think it's more useful for SMBs to hold central bank digital currency, in that it's like it'll be backed by the full faith of the central bank, and especially for large payments like my house purchase and things like that. The risk on very large payments of that nature would be much smaller. So I think it's in those types of scenarios where we need a bit more peace of mind in transactions. It's quite handy. Does that make sense?
Yeah, agreed. And I think that makes a ton of sense. And I think if you go back to the other point brought up before, the last thing that central banks want to do, though, is to have direct relationship with the end user. I don't imagine that any of us are going to be opening up a current or checking account directly with the central bank. I'm not going to rock up to the Federal Reserve to check on how my checking account's doing. So there has to be other sort of, I'd say, federated or hybrid models here, which we can maybe talk about in a little more detail around how to implement this, how this could work, what central banks are actually doing and experimenting with today.
Right. So you're saying the central bank digital currencies, even when retail, will typically be intermediated by, let's say, a fintech or a bank or something like a payment initiation provider or some type of fintech that's essentially then providing access to central bank money to the consumer?
Those are the models being explored today, but importantly, it has to be a public-private hybrid, where if you look at the Libra model was fully private and had really no public sector involvement. This would be somewhat of a tiering system, but it would include central banks, existing financial institutions, and most likely tech providers to participate as well.
So that brings us to a very interesting regulatory question. And Lynn, I'll throw this to you. I'll open this to you. What's the role of, who does the AML and KYC checks? We have a common friend, Brett, Mr. David Birch, who has said identity is the new money and payments equal to identity plus a spreadsheet. So identity is at the core of all payments and money. And in this case, with Libra, one of the major concerns was anti-money laundering and fraud. So the risk of fraud. In this case, with CBDC, who will typically be responsible for KYC and AML KYC checks and AML monitoring?
Typically, under the model the Bank of England is proposing, it's the payment interface providers who will be charged with the responsibility for the anti-money laundering checks and the KYC on-ramp. So typical functions that you already see banks having currently at the moment in many jurisdictions. So I don't think that's new, but what that does is it relieves the central bank from holding personal data, and so that the data doesn't have to travel into so many domains. So I think people now are much more conscious of where their personal data is held and how it's controlled. So if the central bank will hold pseudonymously information they need to process the payments, and then the identity data can just be held at the commercial bank or payment interface level, then that would be a little bit more protective and narrow the scope of the data that has to be held broadly.
Right. So that's very interesting. I don't expect the Bank of England to be doing KYC checks on me before.
Anytime soon.
That'll be a lot of work.
You better hope not, Ajit.
But
I have a very interesting picture at the central bank. I'll share it.
I think there is the aspect of the fact that for us to be really effective at money laundering policy and action on a global basis. Increasingly, this requires a high level of data sharing between regulators. So, we're looking at the problem of AML more like a data problem today than, the supervisory function with banks has been in the past. But that's going to take probably, close to a decade to sort of wash out, particularly with GDPR and other things like that. But I think there's an element of this as we go about implementing these digital currencies. We do have to fundamentally fix identity. We have the opportunity, at least, to fix identity and AML as part of it.
Yeah,
it's a different systemic view.
Yeah, the other thing I'd like to mention is the Ajit is the trend in RegTech now, where we have new providers that are coming up with digital identity tokens. So, for example, an individual can have a personal token, and it can be used by multiple banks or multiple financial interfaces to identify themselves. So if all of them used the ABC token, company's token, you can go and present the token and be recognized and processed instantly for the KYC onboarding with multiple providers that all accept the same token. So that is, I think, a new innovation that's going to, create a lot of efficiencies, continue to bring down the onboarding timeframes, and make it a lot more attractive. And then that identity control exists more with the end user, which I think goes towards the current trend that we like to see now.
Absolutely. Well, Lynn, thanks for that. Let's just take a quick break, guys. You're listening to Breaking Banks Europe edition, and we will be right back after these words from our sponsors. And coming back from the break in 5, 4. We're online talking about today the emergence of global or regulated central bank digital currencies. And we have quite a collective group talking about this. Before the break, we were talking about the role of regulators in the tokenization of identity. Ajit, where do you want to take it from here?
Yeah, so I think, we mentioned tokens. We have briefly touched on blockchain, but I really want to, it's very difficult these days to talk about central bank digital currencies without mentioning the wonderful word blockchain. I mean, even Libra claimed to have some sort of a blockchain. So let's ask Todd. Todd, why do we need a blockchain or a DLT, a decentralized ledger for central bank digital currencies? Aren't these centralized? I mean, central bank digital currencies?
Well, Ajit, don't you know you need a blockchain for everything? I think that's point number one. But
mostly for coronavirus, right?
Exactly.
And it has to be blue.
So there, I think if you go back to like what problem we're trying to solve, and you mentioned tokens before. So one of the aspects here is that it's been really very interesting to be able to get into the weeds on this topic, thinking about the definition of money, but not only that, but account-based versus token-based approaches to this. So we can all agree that one central ledger with the central bank that everyone pings does not need a blockchain or DLT. But if you think about how this has been implemented or tested to be implemented in different areas, I mentioned Bank of Canada, but we've also recently worked with Bank of Thailand and Hong Kong Monetary Authority on wholesale central bank digital currency. And once again, this is a hybrid model working with the financial institutions there. And if you can create a digital currency token that has the ability to move around in a defined network that acts like a bearer asset to some degree, you start to see benefits from that, where you get the benefits of both things like deferred net settlement and real-time gross settlement with few of the drawbacks of either. And also, tying it back again to the retail side, what we think you'll start to see when you talk about how this is implemented as a DLT and as not necessarily a topic for this show, but with the way that Corda is implemented. If you look at what the Riksbank has laid out, and also what Bank of England is talking about, we very specifically built Corda differently to be able to meet the needs of things like digital currency, because a purely say Bitcoin-like blockchain approach definitely is not well suited. What's a feature in Bitcoin will be a bug for central bank digital currency. But Corda is very much different there with more peer-to-peer architecture, privacy built in, and the ability to have different participants playing different roles. But you go back to retail digital currency, I think the real benefit will come when you can have programmable money that lives next to a purchase order or an invoice. That's actually where we saw a lot of this demand for digital currency overall, was the beginnings of these new trade finance networks or networks where companies can get invoice financing, or they can present a bill of lading to be able to get paid on the back of it. I think that's where you're going to start to see the benefits, and it's going to be hard. If we map today's world directly onto this new world, I think we'll be missing a trick.
So you're talking about automated settlements with essentially risk-free money for
Correct, yes.
high value transactions.
Correct.
I get it. Now,
it's not just delivery versus payment, it could be invoice versus payment.
Exactly. So Makoto-san, I mean, you've actually done this work in Cambodia. Why did they use a blockchain for their retail CBDC?
Well, I think many of the points that Todd said were valid, especially about the token-based versus account-based. And really, it was one of the main goals was to create this type of digital bearer asset that really can mimic cash in many ways. Part of this is because some of the history of Cambodia, where they did have several, decades of uncertainty, and people didn't really trust other custodians to hold their assets. Rather, they wanted to hold physical cash themselves. And so by taking this into the digital world, you're creating a way for people to physically, in a digital realm, to hold on to their own assets using their own private key that they have. Another reason is because they wanted to make it really kind of easier to increase the, I would say, the trust minimization of the system, where even though the central bank is running much of the core system, they really wanted to make it so that the system itself had the business logic in a decentralized way. And so what that means is that once you establish the rules of the system, then you have different participants doing different things. So every end user creates their own key on their own device, and every time they transact, they sign the transaction with that key. So not even the central bank can fake a transaction.
So what happens if I lose my, let's say I hold 50 Bakong coins and I lose my keys? I mean, is my money gone? That sounds pretty inconvenient.
Well, there's two levels for this. So we use Hyperledger Iroha for this system, and we have a permissioning system inside of that. And if you do KYC, so the full...
That's a type of blockchain.
Yeah, it's an open source blockchain, part of the Linux Foundation's Hyperledger project, which R3 is also a member of.
Okay.
But we built a permissioning system where instead of giving other people access to your money, you can give some custodian, like a bank, access to change keys on your account. And so that's the way it works, is if you go to a bank and do KYC, then they can change the money. Now, there's a tiered KYC system in Bakong where for low value accounts, you're not forced to do the full KYC. You can just open with the SMS code.
It's a bit like cash then.
Yeah, but if you lose that, then it's like losing your wallet. Like no one can help you. But right. The idea is that that's also motivating to many people to do the full KYC, and also make it easier to do compliance.
That's very clever.
Well,
that's very clever. So you're incentivizing users to essentially get KYC done, so that if they lose the money, then there is a way to get the money back. That's really clever. Now, going to programmable money, Alexei, what are your thoughts on programmable money? Some people say money is already programmable; it's already a number in a database. So what's the big deal? What are your thoughts on programmable money and the types of applications that Todd and Makoto-san described?
Yeah, I like the concept of programmable money. I think the word is maybe a bit strange, but I think that's what digital digitalization is all about in finance, is that you can automate things, you can interconnect different systems. It's the same it's the same idea that we have that's behind open banking and APIs. You have one machine doing one thing, and they can send messages to another one, and you can automate things and so on. I'm not convinced that you need a blockchain to do that. I mean, you can do, as I mentioned, you can do it through APIs, and there are different paradigms on how to actually do programmable money. So, and I guess everything I've heard so far are things that you can also do without a blockchain. So I'm still sort of lacking the key selling point for
Right.
DLT.
So, but you're talking, so by programmable money, we mean money, let's say, that ships with the logic for the types of things you can do with it. As in, if I have an invoice or a trade receivable in a piece of code that essentially represents that, a digital version, then you can essentially define rules and logic for how it deals with the settlement leg or the cash leg, and what happens in different scenarios. So you can essentially simplify a lot of different processes. You can avoid a lot of manual intervention. You can create a lot more trust because you kind of know what's going to happen, and there isn't a lot of paper floating around in the business process. So that sounds pretty cool. Now, yes, I mean, I hear you when you say, you can do this without a blockchain too, but I think that's a question I would like to throw very briefly to Todd and Makoto-san before we move away from the whole blockchain topic into more.
Sure. There are two things. One would be, I would love to see examples of programmable money happening with currently without the blockchain approach. But secondly, you think about it like one of my colleagues calls it banking while the bank is shut. The concept being this is a distributed system, and also the assets can be distributed as well, and also the if-then statements that travel around with them can be distributed. You don't have to call back to different actors and hope that they get the message and do it on their banking hours in order to instruct payments. Now, there is definitely going to be different layers to all this and different safeguards to it, but one of the things that a more distributed approach unlocks is that ability to do those transactions when quote unquote the bank is shut.
Right.
Should the bank be shut anymore?
Well, that's a great question. If you think of one of the all of this is of a piece of modernization. So this is, and it's not a zero-sum thing. So the movement to open banking and APIs, and also to more of a 24/7 overall structure. I mean, we're seeing this with all of our projects, and doing and implementing a blockchain. If you think of what SIX Exchange is doing, that is also a 24/7 exchange versus a 5 days a week, 8 hours a day exchange.
The only reason in many cases we ran it the way we did 9 to 5 was because of batch systems. There's no technical requirement to run it that way, and because it's largely automated, it's not dependent on people anymore either. So it should be a baseline, right?
I'd agree, although some people would argue for all markets to be shut for a while these days. But yes, I agree.
True.
At least crypto markets.
But I mean, the uncorrelated markets, yes.
Well, I think going beyond even just the opening hour and keeping things open 24/7, I think using traditional database systems to create in a decentralized way some kind of protocol for smart money would be really, really hard. If you take the example of PayPal or something like that, imagine in your computer software, like every time you want to make a transaction or do some account balance, you have to do this authentication with this centralized service that you hope doesn't go down. With the blockchain, all you have to do is create the transaction inside your own software, and then you can do much of this logic. So I think that it's blockchain per se, and there's many forms. Corda is very different from, say, Fabric or Hyperledger Fabric or Hyperledger Iroha. Each has their own philosophies, but I think some of the common ground that all these systems have is that there's a built-in consensus mechanism, and all the different rules in the system can be agreed on by the different participants in a very clear way, that the system is constructed from the beginning in that way. And if you just use an Oracle database or something like that, then every time you're building the system, you have to do it from scratch. And
Right.
so,
So
I think
let me give an example of how it's done currently. So, for example, if I get my electricity bill, so I get it into my online bank, and it's an e-invoice, so it just goes there directly, and I can set certain conditions on when it will be paid automatically. So if the if the sum of money is within a certain range, and if it comes on a certain date, what account it goes from, and so on and so on. So I can actually set certain conditions in my online bank. The rest itself is automated, and then it just goes from my account, and I set those conditions once and it's done. So to me, that is about as automated and as smart and programmable as it can get. And there are, I think, other such examples which are already in use, where you don't actually have to authenticate every time. You can set
Right.
conditions and kind of pre-program things.
So we will not try to, thank you so much, everyone. We will try and not solve this technical challenge on this podcast. Let's move away from the wonderful thing called blockchain to a slightly different topic. Cross-border payments are a massive pain, right? I mean, if I want to send money to my parents in India, it takes a lot of work. And then it takes time. It's got faster, but it can only happen when State Bank of India is open and so on. I mean, I'm told that central bank digital currencies can help simplify and streamline cross-border payments. How does that work? I mean, what type of solutions are being offered? Todd, Makoto-san, anyone?
Yeah, so if you look at, also going back to the research, look at the BIS also has been doing incredible work here with the work they've done over the last couple of years. So I encourage everyone to check that out. Cross-border is a massive pain point that everyone's pointing out. It is, though, going back to it, a coordination challenge, right? All of this is, especially when you think of cross-border, is a coordination challenge. So what central banks are trying to look at is, what is their domestic market look like? Can we improve it if it's wholesale? Things like security settlement. So can government bonds settle in a more timely way across large institutions? And if you can really set that strong foundation, can we see the ability to interlink across these different, in effect, currency zones, which will be a combination of technology, governance, and common rule sets. And so that's one of the examples that, if you look at the Bank of Thailand HKMA work, that's what they were focusing on as well. And I think you're going to start to see this more in these different trade corridors too.
So I'm not, I have not known central banks that are great at moving fast and getting a lot of things done quickly. So wouldn't it have been nice if Libra was allowed to build what they were planning to build, and instead of us waiting for central banks to move over the next 10 years?
I would say that no one has prohibited Libra from building anything. I think that would frame it that way. And then potentially, unfortunately for them, our friend Jay Powell might have put the nail in the coffin by going to zero interest rates anyway for their approach. But the Libra has done more for the business development aspect of central bank digital currency in the last year that we could have done over the next 5.
Thank you, Mark.
Yes.
Well, it did. It did give the impetus, because suddenly Facebook's going to get into the game, and they had a serious consortium. Then central banks have to respond. But part of the opportunity here, you guys know I'm a big first principles design, proponent. And so, isn't the opportunity when we go to build a central bank digital currency, isn't the opportunity to do something quite different rather than just trying to digitize what we've already got?
Well, I think just digitizing what you have can allow use cases that are quite different. So take the cross-border payments for a second. Right now, to do cross-border payments from one country to another, the regulatory requirements are quite high, and that's where most of the costs are going to. And, you have to report both on the sending country and also the receiving country. And with a token-based central bank digital currency, what you can do is you can have a bank in one country buy a bunch of tokens from another country and then do domestic exchange operations. But the moment that a domestic customer has received a token that's in circulation in another country, they've already kind of crossed borders at that point. They can send money back home instantly because they're holding money that's on the same system. So I think there are some nuances like that can create, I think, brand new dynamics, even just really not doing anything that new, just creating a digital form of cash.
Right. So that brings us to a slightly different topic, right? Which is all right. So cash is anyways going down in use in society. A lot of people, especially younger people, have moved on to digital forms of payment first up as their primary approach to payments, and so on. And now, but at a macro level, right? One of the things that Bank of England said in one of their earlier papers is that if retail customers have bank accounts at a central bank, then in a crisis situation like the one we are dealing with today with this coronavirus thing and the Fed cutting rates to zero, there might be a run on banks. So banks might get completely disintermediated from the payment system, which might reduce the ability of the central bank to manage monetary policy or to pull credit, to essentially effectively execute credit policy. So Lynn, on that front, so with respect to financial stability, no, I think it was your Treasury Secretary, Mnuchin, who said something to that effect. So I think, yeah. So Lynn, what are your thoughts on financial stability, and how can central bank, digital currency be designed so that we don't essentially undermine the banking system?
Well, I think, first of all, since the last financial crisis in 2008, 2010, the bank's capital structure has been substantially strengthened through regulatory requirements globally. So I think we're dealing with a set of banks that have stronger balance sheets and more reserves and stricter supervision in most of the major markets or major jurisdictions. So I think we're dealing with at least banks that are in somewhat better shape. And we've had more experience dealing with crises amongst all the major governments who are responding to them. So hopefully we won't have the same situation today. The communication is better, and I think the international organizations are working more closely together as a result of what they've experienced in these last several crises.
Right. So that says, I think what you're saying is that the banking system as a whole is safer. But I think in a retail central bank digital currency scenario, in a crisis like this, I would rather, deposit my money with the Bank of England than with any other bank.
If you look at all of the systems, so I think we have to avoid sort of extreme thinking here. So no one's proposing that, in effect, central bank currency is issued and it replaces all other forms of money. Any of these rollouts will be a percentage of. And I think there's been a lot of thought into this. No one wants to destroy commercial bank money in the process of issuing central bank digital currency. So there's very thoughtful. And if you look at what's been either going to be done in Sweden or things that have been proposed here in the U.S., this is a small percentage of M0 that would be issued.
And what is M0?
Oh, sorry, base money, but central bank money. They wouldn't be 100% of what is issued.
Yeah.
Well, guys, we got to wrap it up. We've got a couple of minutes to close out the show. So let me just go around, based on where we're at with the coronavirus and the change in the market activity. Give me a prediction for this year in terms of what is implementable in terms of digital currency in the current environment. Maybe we can start with Lynn.
I think we'll see a couple of central banks come out with more active sprints. I think we'd also like to see potentially maybe a mid-sized country come out with, that has a high percentage of mobile phone users, so that we'll start to see what the retail impact will be. Great.
Todd, you want to jump in next?
Sure. Some is known, some is unknown. So Riksbank will continue with their project. Other central banks are already currently working on or issuing RFPs. but the unknown is a big one, and we'll see what can keep going. We'll see how Libra evolves. But I think everyone would agree, if you asked this question 10 days ago versus today, we probably would have a different answer.
Yeah. Makoto-san?
Yeah, so we plan to further roll out our system across the country in Cambodia, and I think other central banks in the world are going to start to also do more. I think maybe staged rollouts of different systems. That would be my expectation. I think because of the virus, I think there's going to be more of a emphasis put on increasing efficiency in order to help the economy of many, especially small countries.
Yeah, good call. And Alexei?
I think most central banks are looking into this issue right now, and nothing else, we'll see many more discussion papers. But it's also possible that I think the coronavirus might delay some of the projects that some of the more in-depth projects are going to be postponed into the future.
Right. So that let me ask a half facetious question. Will any central banks around the world use a public permissionless blockchain or cryptocurrencies for hold cryptocurrencies, or use the public internet public permissionless blockchain like Bitcoin or Ethereum or something for their central bank digital currencies?
No.
No. Yeah, I don't think so either.
I would say no.
That breaks my heart. But
all right, well, listen,
it breaks your bags. Yes.
Good. All right, so Ajit, you want to take us out for the close?
Yeah, thank you so much to our illustrious guests for joining this edition of Breaking Banks Europe and Breaking Banks, and helping us learn so much about an incredibly important topic: central bank digital currencies. Money is digital. Identity needs to be digital. I think one of the things we figured or learned from this discussion is that at the end of the day, identity is a critical part of money, whether it's domestic payments or international payments. And as central banks around the world start to coordinate on their digital money, different types of digital money efforts based on their national policy and other objectives, it'd be very, very handy if we can all work together to create a global notion of digital identity, so that cross-border payments, domestic payments, and other types of payments become more safe, more resilient, and much more easy to use, and therefore create much more financial inclusion and comfort for all. And essentially, that's what we're trying to achieve with FinTech anyways. So thank you so much, Brett. Thank you so much, Todd, Lynn, Makoto-san, and Alexei for joining. Have a wonderful week ahead, and hopefully our central banks will remain stable and resilient to issue more digital currencies this year.
That's it for Breaking Banks Europe this week for our crypto or central bank digital currency edition, and we will see you again very shortly. Thanks for joining us on Breaking Banks Europe. Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.